And the recording is on. So welcome everyone. Welcome in this session. It's Marcel here. Also John is here. Welcome everybody. In this session, we will test a random day. Let me just please hide the video panel. All right, and the floating meeting control. And yeah, we'll start this session. Welcome everyone once again. In this session, we will backtest a random day from the first 2 weeks of June, because on the last week, I mean on this week and the last week, I made a recap video about almost every single day. So almost every single day there was a recap video. So it's unnecessary to test the current week and the last week because, you know, recap video has been made. So I would just test a random day from the first 2 weeks of June. And I will create a random number generator. All right. From 1 to 12, no, 14, sorry, not 14. No, let me just check. When did June start? Okay, so the first day will be 30th of May. And yeah. So the first is the 30th of May, the 14th is the 12th of June. Okay, so let me just generate the number, and the number is 8. Okay, so first 1, 2, 3, 4, 5, 6, 7, 8. So the 8th number on the first 2 weeks is 6th of June. All right, 6th of June. Please remove your drawings and so the sound isn't working. Guys, sound isn't working?
Yeah, it's working. It's working.
All right. All right. Okay. So before we start the session, I would like to ask you guys to don't interrupt me. If I'm talking, please just don't use your microphone. If I'm talking, don't draw on my screen. And you can use your microphone if I ask you to use your microphone. So if I'm asking a question, you'll be able to raise your hand. And if you raise your hand, you'll be able to answer the question that I'm asking. All right, so please just don't use your microphone randomly. Don't interrupt me while I'm talking. And yeah, guys, that's all I'm asking. And let's just start the session. And it was the 6th of June. Or let me just see. 6th of June, 6. Okay. Here's 6 and replay it 1 hour before New York starts. Perfect. So here will be the session start for us on the 6th of June. And I'm asking a question right now. So you can use your microphone and raise your hand, and after that, you'll be able to use your microphone. What do we have to do before starting every single backtesting session, starting every single live trading session? Future millionaire, please answer the question.
Check the news.
Exactly, man. Thank you for answering. We have to check the news before we start every single backtesting session, before we start every single live trading session, before we do anything else. We have to check the news. This is the first step before every single trading, backtesting, forward testing, case studying session. Just memorize this because this will protect you from lots of unnecessary losses, because you will know if that on that day will be news or no. We all care about high impact news. So let me just check the news. 6th of June, it's right here. Yeah, 6th of June, apply settings. And on this day, as you can see, there won't be any high impact news. Let me just hide the video panel, hide floating meeting controllers. Okay, perfect. So on this day, as you can see, there won't be any high impact news. There's a French bank holiday and German bank holiday, but basically this doesn't really affect our trading session because this will affect London, because, you know, French and German is in Europe, and London bank, all of these bank holidays are affecting London session, and it won't be affecting the actual New York session because the US doesn't have any bank holiday on this day. So it will be a good trading session, I believe, because there won't be any high impact news that will actually stop us from trading. There isn't any bank holiday in the US. So let's just start analyzing on the 4-hour chart, of course. So before starting every single backtesting session, you have to analyze the higher time frame. Let me just remove these all drawings, or actually it doesn't really affect us. because these have been already happened, and we will care about this region. Okay, so before every single backtesting session, we will just create a top-down analysis. Okay, so let's just start the top-down analysis on the 4-hour chart once again. And on the 4-hour chart, as you can see, here price is creating a bearish order flow. And after a bearish order flow, price is just reversed here at this line. And we already know that this line right here is a weekly low point, because we've talked about this several times in the past webinars, in the past recap videos, etc., etc. So we already know that this line is a weekly low point. I will just mark it as a weekly low point, and I will search for demand zones at this region and find the reason of this reversal after this huge bearish pressure to the downside. Okay, so let me just go to the 4-hour chart and see if there was any demand reaction on this region. On the 4-hour chart, there isn't any clear demand reaction. Let me just check the daily chart. Daily chart right here. Daily chart. No, on the daily chart, there wasn't any demand reaction also. So basically, price was just reversed on a weekly low point right here at this region. So this point right here was a weekly low reversal. And just check the structure, check the overall structure. How does it look like? As you can see in the 4-hour chart, price is creating continuous break of structures to the downside over and over and over and over again. But we've talked about this several times already in the past webinars. So we just know that the overall higher time frame structure is bearish, right? Let me just switch to the daily chart, because I believe this reaction right here was a daily demand reaction. Sorry, supply reaction. Yeah, this right here was a daily supply. And as you can see, it's a sell to buy candle. It has been explained in a previous webinar named buy to sell candles and sell to buy candles. So if you don't know what sell to buy and buy to sell candles are, please just check that webinar and you'll know everything. So price has just reversed here on a daily supply zone, as you can see, and basically price is following the daily structure, because if you take a closer look on the bigger picture, price is following this pattern, creating downside movements, reacting on supply zones, downside movements, supply reactions, downside movements, supply reaction. And the same pattern is being followed over and over and over again. So here was the last recent daily supply zone. This was liquidity built up for the supply zone. Price has spread the liquidity, reacted on the supply zone, and there will be an expectational downside order flow, which will lead them to this daily point, this daily level, daily demand zone. And yeah, this is what we can see on the daily chart, on the real higher time frame. But we will care about the 4-hour. We will create a 4-hour analysis too. So we just know that this was a daily supply zone up here, which was price currently reacting on. As you can see, before the reaction on the supply zone, price has swept liquidity. So it was the first step of the liquidity, and basically this is liquidity line which has been swept by this candle or this movement. This can be considered as a one candle. This is just a simple leg. This leg has swept the liquidity into this supply zone, as you can see. And after a supply mitigation, price has just created a 4-hour change of character. So this 4-hour change of character will extremely confirm the trend, that the trend is changing. Because why is it changing? Because our main order flow is bearish. Our main higher time frame order flow is bearish, right? After the pullback of the main order flow, so this upside movement is only the pullback of the main order flow, right? This has been explained in the fractal timeframes webinar. So please, if you don't know how the fractal timeframes work, if you don't know how quadratic timeframe works, please just check that video. The name of that video is Fractal Timeframes, and I believe it has been created in March or April. So yeah, please just check that video. It was really, really important after this webinar, of course. So price is creating this daily order flow to the downside. Basically, the daily order flow looks like this. This is a daily order flow. This is big expectational daily order flow. How will the 4-hour look like? The 4-hour is printing lows, highs, lows, highs. After this order flow has been changed right here, it's printing lows, highs to the upside, right? So it's creating a low, creating a high right here. Here was the less high, higher low, higher high, higher low, higher high, higher low, higher high. So the actual structure on the 4-hour chart has been changed to bullish at this region, on this leg, right? But this leg is the simple pullback of the daily chart. So this is the daily main order flow. This is the daily pullback. Daily main order flow, expectation order flow will happen here. And how will the 4-hour expectation order flow look like after this daily supply reaction? I'm asking you, please, if you like to answer and draw on my screen, just raise your hand. How will the 4-hour order flow look like after the reaction here? Future millionaire, please, you can draw on my screen and actually draw the expectation order flow that could happen. Please just draw on my screen if you can. Can you? Wait. I'm actually not asking for demand zones and supply zones. I'm just asking for expectation order flow, because this is how the daily order flow looks like. Daily is following this structure. 4 hours is following basically this structure: pullback, main order flow, pullback, main order flow. I just want you to draw the expectation order flow on my screen here. Yeah. Basically, this is how the expectation order flow could look like. Exactly. We can expect a bearish order flow. Why we can expect a bearish 4-hour order flow? I will just remove your drawing, sorry. We can expect a bearish 4-hour order flow because the 4-hour has already turned it bearish, right? So here was the confirmed bullish order flow. After the confirmed bullish order flow, price has changed character here to the downside on the 4-hour chart. So here was an extreme change of character on the 4-hour chart. And basically, this is a really, really strong change of character because it didn't change character on just simple weak structural points, for example, like this. I mean, not structural low points, but also demand zones. So these are demand zones. So it hasn't just changed character on demand zones. It's a change character on a swing low point, because this was a swing low point right here, because this is how a structure looks like: coming up, coming down, coming up. And this swing low point has been changed, as you can see, after the tap and mitigation of this daily supply zone. So the swing order flow has been changed. We can expect a really bearish order flow continuing down to this demand region down here, which is a daily demand region somewhere around here. But this is too far away from now. This is too far away from the current price action, but we can expect a bearish order flow. But this is just a long-term plan. This is a really, really long-term plan. We have to care about the actual current 4-hour order flow, which will be analyzed now. So price has changed character here to the downside, right? What can we see after a change of character? We can see that price has swept liquidity. Here was good amount of liquidity. We can consider this as liquidity. And no, if you're asking, these aren't 5, 6, 7, 8 equal candles next to each other. This is a liquidity. Why? Because here's the first touch of the actual liquidity trend line, coming down with few candles and coming up with few candles, right? So between the first touch and the second touch, 1, 2, 3, 4 candles have been passed, and a huge movement have been created to the downside. So this is 4-hour liquidity. This can be considered as the third touch of the liquidity trend line, because as you can see, it was coming down. 1, 2, 3. 3 candles has been placed, and not just 4 equal candles next to each other. So this is a liquidity trend line, perfect liquidity trend line creation. And this liquidity trend line has been swept by this movement, right? So as you can see, every single piece of this liquidity, if I just draw the high point, every single piece of this liquidity have been swept. And this high point, technically, it has been broken with a really, really small closure to the upside, but we can consider this as just a liquidity sweeping movement, because as you can see, after a liquidity sweeping movement, let me just adjust this. So after a liquidity sweeping movement, prices just reverse strongly, aggressively to the downside. So liquidity sweep and strong reversal to the downside. Right here at this region, no 4-hour change of character has happened, but mainly there could have been a supply reaction somewhere around here, or actually it doesn't have to be a supply reaction, because liquidity has enough power to reverse price to the downside, especially if it's a 4-hour liquidity. So the 4-hour liquidity has been swept here to the upside, right? Strong reversal has happened, and more likely, lots of 50-minute change of characters has happened on this line, but mainly there was a 50-minute change of character somewhere around here, which we will see on the 50-minute chart. And more likely, that was a 50-minute zone that has been tapped after the character changing movement to the downside. And after, as you can see, after the 50-minute change of character, which will be shown on the 50-minute chart, and after a 50-minute zone reaction here, prices just started to continue the overall movement. So it seems like the fractal confirmation is already happening. Why? Because the daily has been tapped, daily zone has been tapped, 4-hour change of character has happened, 4-hour liquidity has been swept, 4-hour reversal has happened, 50-minute change of character has happened somewhere around here, and 50-minute supply zone has tapped right here. And basically, every single time frame is turning into bearish after mitigation of the supply zone, right? Joseph, why the order block don't hold? What do you mean? Which order block? You mean to this? This order block didn't hold because this is a huge candle. This is a huge candle, but that's not the main reason. The main reason is just simply this is part of the liquidity. If this zone is part of the liquidity, then this will be, there will be a higher chance that this zone will be swept. There's an 80% chance that this zone will be swept, and there's a 20% chance that this zone will hold price. So this was simply purely part of the liquidity. Liquidity has been swept, and we can actually target the next liquidity on the downside. So it's basically everything moved around liquidity. There was liquidity. This zone was part of the liquidity. Liquidity has been swept. Continuation to the downside. This is how market works. Price needs to sweep liquidity to actually continue the main order flow. This is the main order flow to the downside. Liquidity has been swept on the sell side. lots of sell orders have been swept out from the market. Lots of stop losses have been triggered right here. All of the triggered stop losses have been converted into new orders right here, which will push price to the downside and continue the main order flow. Okay, so this is how the actual 4-hour looks like. We can mark one demand zone up down here, but it's really unnecessary because it's so far away from us currently. And as you can see, price is created buy side liquidity too. So this liquidity has been built up for the upcoming shorts. So this liquidity will be swept. Okay, let me just switch to the 50-minute chart because that will be much cleaner. Now let's see what has happened here. So here was a sweeping movement, right? Price has swept all of this liquidity, as you can see, with this movement, and after a liquidity sweeping movement, a reversal has happened. So let's just break down this price action area, and let's see what has happened here. So we know that this was a liquidity sweeping movement. After a liquidity sweeping movement, as I said on the 15-minute chart, a change of character has happened. Here was a 15-minute change of character to the downside, and basically the 15-minute fractal confirmation has happened, because as you can see, price has reacted on the supply zone. That was the origin of the character changing movement. Liquidity has been built up below it. There was liquidity built up below the supply zone. And after this, price has just started to continue the main order flow. This is how the fractal time frame confirmations work. 4-hour has turned into bearish, 15-minute has turned into bearish. More likely there was a 1-minute confirmation too at the 15-minute zone tap. 1 minute has turned into bearish here at this region. And after every single time frame has turned into bearish, the actual price could continue the overall movement, the overall main order flow to the downside, because the main order flow is bearish, right? 4-hour turned into bearish, 15-minute turned into bearish, 1 minute turned into bearish here, main order flow continuation. Okay, but this has already happened. We will care about this price action region, and let's just break down what has happened here. Okay, so as you can see, price is reacting on some source of demand zone down here at this region. Maybe there was a 5-minute demand zone at this step. And yeah, prices just react on some sort of demand zone. We will be able to see on the 5-minute chart if there was any valuable demand reaction. But this demand reaction has reversed price to the upside. As you can see, here was a change of character to the upside and change of character strong to the upside. Weak change of character, strong change of character. After this, what can we see? The price has reacted on supply zone. Here was a supply zone. More likely, this will be a 5-minute refinement too. Let me just go to the 5-minute chart and refine this zone, because yeah, here's a perfect 5-minute refinement, sorry, because as you can see from this candle, the breakout structure has happened and the inefficiency has started and liquidity has been created. But I will go back to the 15-minute chart because we care about the 15-minute chart currently. So this is the refinement of the 15-minute zone. And as you can see, basically the breakout structure has happened from this zone, because this was the last recent low point, and this low point couldn't body broke below this low point, so this won't be a low point. This is the last recent low point. From this candle, the break of this low point has happened. After this, price has built up liquidity, right? So there was liquidity built up for this zone, for this supply zone, perfect liquidity built up. After a liquidity built up, prices tap this zone and reverse the downside, reverse to the downside once again, creating a change of character. Here was a change of character once again to the downside, which has been presented after the reaction on the supply zone and liquidity sweep. This reaction and this change of character couldn't break below the last recent swing low point. This is the last recent swing low point. It has just reacted on the swing low point, meaning it's collecting liquidity. It's collecting liquidity right here. It's building up liquidity for the upcoming shorts, right? This is how the liquidity and structure works. Main structure is bearish. Price has reacted on the supply zone. This supply zone changed character right here. Couldn't break below the swing low point. Swing low point is building up liquidity for the upcoming shorts after a supply reaction. Supply reaction has happened. As you can see, after this character changing movement, price has printed this supply zone here, and price is reacting on this supply zone. Sorry, price is reacting on this supply zone, tag this supply zone, and after a reaction, it has just changed character to the downside once again. And all of this liquidity that has been built up here will be functioning as liquidity for the upcoming shorts, right? This is how the structure, this is how liquidity works. As you can see, after this supply reaction, there was a change of character to the downside. Okay, after a change of character to the downside, before the change of character, price has printed a supply zone. This was the supply zone that has caused the change of character. So I will just mark this demand zone also. All right, demand, perfect. So we have scenarios built up on the 15-minute chart. We can draw scenarios on the 15-minute chart. We can build a narrative on the 15-minute chart that could possibly happen in this session. Because as you know, we have to build a narrative. We have to build a plan before every single backtesting session, before every single live trading session. And if you're building a plan you'll have a clue that what could happen in this session, what could possibly happen in that session. And if you're building a 15-minute plan, a 5-minute plan, a 1-minute plan, you'll be able to combine all of these time frames together, and you'll be able to follow your plan. Okay, so the 15-minute plan will look like it will be a bearish plan because we are expecting bearish continuations. Why? Because every single time frame turn into bearish, and price which is following the bearish pattern, price will just continue the bearish pattern. And I just read the question. Marcel, please ask questions about supply and demand, that which is the best mark that. Okay, I will ask, don't worry. So prices turn into bearish here, created a breakout structure here, created a change of character. It wasn't actually a change of character here to the upside, it was just a liquidity sweeping movement, reacted on the supply zone, swept the liquidity to the upside, created a change of character to the downside once again, reacted on a character changing supply zone. After a character changing supply zone reaction, it has changed character to the downside once again. So every single time frame is bearish. We can expect bearish continuations. So how will the 15-minute chart look like? I mean, 15-minute plan. We have two plans. The first plan is that price will come up to the supply zone, create a change of character on this supply zone, and continue the overall movement, right? This is the first plan. Second plan, price doesn't come up to the supply zone. It will just simply tap this demand zone, which is the extreme of the whole movement to the upside. And there's liquidity built up for this demand, as you can see. It will tap this demand, flip this demand, and continuation to the downside. These are the two possible scenarios for the 15-minute chart. I'm not really expecting the break of this supply zone because price is following a really extremely bearish pattern. Okay, switching to the 5-minute chart. What can we see on the 5-minute? Basically the same. 5-minute is basically the same. The only difference is that we can refine this zone, this 15-minute zone for this zone, and we can refine this 15-minute zone for this 5-minute zone down here. Okay, so these are the possible scenarios for the 5-minute chart. We will build possible scenarios for the 5-minute chart once again. And on the 5-minute chart, as you can see, liquidity has been built up for this demand zone. Here's the first touch, here's the second touch, third, fourth. Basically, this is liquidity. Or if you just consider this as a second touch, this is liquidity. This is the first and second touch built up for this extreme demand zone. So the scenarios will be the same. First scenario, price will come up to the supply zone, create a change of character, continuation to the downside. Second scenario, price won't come up to the supply zone. It will just reverse somewhere around here, sweep the downside liquidity, because the upside liquidity has been swept by this candle, as you can see. Here was an upside liquidity, 2 taps, first tap, second tap, sweep of that liquidity, and this candle didn't close below the last recent high point. So the second scenario is if price comes down to this demand zone, reverses on this demand zone, and not reverses, sorry, breaks below this demand zone and continuation to the downside. But here's a third scenario, which could happen, is if price taps this demand zone and reverses on this demand zone and creates a bullish order flow up to this supply zone. This is the third possible scenario, because this could also happen after liquidity is being swept. Price could easily turn to bullish right here at this candle. I mean, this candle, this demand zone, and continue the bullish order flow up to the supply zone. After a supply reaction, we can expect the continuation to the downside. So we have 3 scenarios that we can actually expect from this session. And these scenarios could possibly happen. Okay. Let me just remove the drawings and switch to the 1-minute chart. And let's see what's here, what we got here. Basically, on the 1-minute chart, nothing else we can see. Price just built up a nasty range here. This is a nasty range. Upside range has been swept, right? Here was the upside range. Upside range has been swept. What can we expect after the upside range sweep, downside range sweep? And here's the third question in this session. What happens if a range is being swept to the upside first? Raise your hand if you like to answer. What happens if a range is being swept to the upside first? What will happen? I believe it was Future Millionaire, but I will give a chance to others too. The second one was PP.
Hey, Marcel.
Hey,
the range will be swept for the other side.
Exactly. And what can we expect after the downside range sweep? After the upside is being swept and the downside is being swept?
Yeah, we can expect a reversal.
Where?
Chuck.
I will just help a little bit. After the upside range is being swept and the downside range is being swept second, so the upside range sweep first, downside range sweep second, we can expect a continuation to the downside. Because basically this is a pattern. It has been explained too. Here's a range. If the downside is being swept first and the upside second, then we can expect a continuation to the upside. If the upside is being swept first and the downside is being swept second, we can expect a continuation to the downside. So this is big expectation order from the 1 minute chart. Upside sweep, downside sweep, continuation to the downside. If price touches this demand zone down here, we have other scenarios as I explained. We can expect a change of character to the upside, or we can expect the flip of this demand zone, right? These are the scenarios. But if price touches this demand zone, then we still have the scenario where the upside range and downside range and the continuation can happen. So if price can touch this demand zone and create a change of character here to the upside, we can target this supply zone that has caused the sweep to the downside with longs. And after a supply top, we can wait for a confirmation and continue the overall bearish order flow to the downside. These are the possible scenarios for this session. And this is a huge range. So basically, I'm just waiting for bust stops. We can call this as a first bust stop. We can call this as a second bust stop. I'm just waiting for price to tap these zones. This will be the first bust stop. This will be the second bust stop. If actually price taps these zones, we'll be able to do something. And I hope I'm wrong, but as I remember well, this session was pretty boring and price will just range here. So if this happens, we will just test another day. Let's just see what will happen. If I remember right, price was just ranging the whole day somewhere around here. So yeah, if this happens, we'll test another day. Let's just start the overall 1 minute backtesting because the session started. And yeah, more downside liquidity has been built up, as you can see. More downside liquidity. Okay, no, this is another session. So downside liquidity has been swept, right? Perfect sweep. Perfect sweep has happened here. Yeah, Mikey?
I have a question. Can we consider this the liquidity sweeping candle?
No, I would rather consider this as more liquidity building. It's almost equal than this candle and this candle. It's just 0.5 pip below these candles. So I would consider this as more liquidity creation. I would consider this as liquidity sweeping. This can be considered as liquidity sweeping for me because we are on the 1 minute chart, and basically this is just more liquidity built up for the deeper areas.
Okay, thank you.
Just imagine this, that someone is trying to long here, opening a position here, setting a 2 pip stop loss. And 2 pip is really, really small. Like, here's the 2 pip stop loss. Stop loss will be here. This won't even sweep the 2 pip stop loss. 2 pip will be swept at this line, right? So just always think about this scenario. So the downside range has been swept. Starting the backtesting session, as I said, we will have a supply zone here. And actually, we won't be able to take longs up to this supply zone because if this supply breaks, which was the cause of the sweep, if this supply breaks, then the change of character will happen to the upside. So it's not really relevant to us. Okay, it has been decided quickly. Actually, flip of this demand zone has happened. Perfect. I want to ask you, okay, future millionaire, this question is for you because you wanted to mark the zones. Which supply zone have caused the flip? Which supply in this case has caused the flip of this demand zone? Just mark it for me, please, future millionaire. Incorrect. The upside range is correct. Downside is the wick. Why? Because the wick is higher than the last recent candle. So in this case, we always use wicks. Remember, in this case, we always use wicks as supply zones. So the right supply zone in this case, what is this? Okay, okay. So this will be the correct supply zone for us that has caused the break of this demand zone. But I will wait for 5 minute break too, because this is a 5 minute zone. I will wait for a 5 minute break. And more likely the 5 minute break has already, 5 minute break has happened. Perfect. So this can be a sweep. This isn't the sweep of this zone. This is the break of this zone. And in only one scenario, I will set a limit order on this supply zone and won't wait for further confirmation, for example, a change of character on this zone. If price can create liquidity for this zone, and if price won't break below this low point with body closure, then I will set a limit order on this supply zone. Because if price won't break below this low point with body closure, then this will be a simple break, and this will be a substructure and liquidity building up for this zone. But if price breaks below this low point, then after the low break happens here, mainly I'm waiting for a change of character on this zone. Because if this low breaks, and for example, price continues the structure, Then if price comes up to this supply zone, it will change character here and here. So mainly, it has been explained in recaps too, or last week, I've explained this in recap, that if this kind of flip happens, so if price flips the 5-minute zone with this kind of a flip and only builds up substructure inside of the flip zone and inside of the low point and builds up liquidity, I will set an order on it on the supply zone that has caused the flip or demand zone in the long side. So let me just see what happens. Okay, actually, body break hasn't happened yet. And price is building up liquidity. Body break hasn't happened yet. Price is building up liquidity here, as you can see. Let me just read the question. Why don't we wait for 5-minute zone tap, which created the 5-minute? I just explained it. And in the recap video too. I will link that recap video for you, Mikey, and you'll be able to understand. But as I said, this is substructure. Between the supply zone and between the low point, this is substructure built up for the supply zone. And as I said, according to my plan, in these scenarios, I will explain this in the next webinar. As I said, I will create a webinar, possibly on next week if I can finish with the preparation. I will create a webinar where I will explain the criteria for each entry type, and we will build a plan for everyone. We will build a personalized plan for everyone, where we will go through every single criteria, and we will go through every single entry type, and we will talk about which criteria is needed for which kind of entry type, and we will talk about these things too, because this has caused confusion that you can't really build a proper trading plan. And yeah, I saw that this is a main problem in this group, that you can't really build a trading plan. You are trading without a plan. And after this session, hopefully you'll be able to build a plan, a personalized plan. And this plan will be able to help you when to enter and when not to enter. And you'll be able to build your own plan, and which you'll be able to follow. You'll be able to track your own criteria. You'll be able to set your own criteria for each entry type. You'll be able to follow these set criteria for yourself, and you'll be able to know when to enter and when to not. So yeah, this will be needed. This will be needed because I saw that this criteria is causing lots of confusion. These are good criteria, but you don't really know how to track these criteria and how to follow the criteria and how to assemble these criteria. And that's why I will host this session. And don't worry, it will be pretty fucking easy. It will be easy. Literally, it will be easy because we will have like 3 or 4 anti-types. We will have 3 or 4 anti-types on weak points, strong points, in counter trend, main trend, and combining this weak, strong, and counter trend main trend with the entry types, with the change of character, flip, and continuation. And we will have criteria for each of these entry types and weak points, strong points, etc., etc. We will have criteria for everything, and you'll be able to actually set your own criteria. So I will give you 5 criteria or 6 criteria that will be needed or will be good for these kind of, for example, for the change of character entry, and you'll be able to choose your own criteria, which you will backtest. You choose your criteria and you will backtest that if those criteria are enough for you to enter on that zone. And if you will have statistics about that kind of entry and those kind of criteria, you will be able to actually build an entry model for yourself that is personalized for you, based on your own criteria, based on your own needs, and based on your own plan. So yeah, we will do this. We will do this on next week if I will be ready with the PDF file, if I will be ready with the notes, because I have to write notes. I have to assemble this into one webinar, you know. I have to write the script. I have to write everything down. And, you know, I just want to be prepared. And if it won't be ready for next week, then I will host it the week after next week. So don't worry, we will have this in 2 weeks. And after this, it will be a game changer. Yeah, of course, it will be a game changer because you'll be able to build a personalized plan, personalized criteria-based plan, easy to follow. Because, you know, I have a plan. I have criteria for every single entry type. And those entry types and those criteria are being built up from the criteria tracker. So I'm using all of the criteria from the criteria tracker, but different criteria are needed for different type of entries. So yeah, hopefully after this, you'll be able to understand everything. So let's just continue the backtesting session. And yeah, sorry, just one more information that I'm creating this. I'm doing this because I just received messages that this is the weak point of the strategy. Not strategy or even the membership or the strategy, etc., etc. And this will be helpful. But sadly, I received messages from about this topic, not on the kind way, not on the kind way, with toxicity, with calling me fucking bastard and shit. So 3 members were literally toxic about me. They were accusing me with everything, that I'm faking the trades, that I'm not even trading, that I'm a fraud man, I'm cheating. I just change my rules every single time. And instead of explaining me that they want something to the membership, they want me to create something for the membership, or they want me to actually explain something for them, which I always do. If you ask me kindly, if you ask me nicely about something, I'm just creating a plan for you. I'm just creating something for you. But if you're literally splitting shit to me and calling me bastard and calling me fraud and literally just splitting shit to my face, I won't tolerate that. And yeah, this has happened 2 days ago. And that's why I was upset in the last recent recap video, because I was a bit upset. But those guys aren't in the membership anymore because they continue to actually throw shit on me. So yeah, I can't tolerate this. I can't tolerate that. I can't tolerate toxic members. If they would have asked me nicely that, hey brother, please create a trading plan that could work for everyone, and not just accuse me with things that I'm buying followers and some kind of shit like this, they would have been still here. But it is what it is. Let me just continue the overall backtesting, because we don't have to care about these kind of things. We don't have to care about toxic people. We just have to create our own stuff. We just have to focus on our own stuff, and we just have to focus on our own implement, right? And development. So yeah, let me just continue. As I said, this is a main structure, high, low. If price can't break below this low point with body closure, there won't be a break of structure to the downside. And if liquidity is being created, which has been created, then I will set a limit order on this supply zone, because this is a perfect scenario. All right, simple break below on the 5-minute chart too, liquidity built up for the flipping zone, no break of structure to the downside, liquidity built up. This is one more criteria. This is one more important criteria. The price is built up liquidity on the downside too. So there is liquidity. And if you watch my recent recaps back, you will actually, from the past month, for example, from the past month, I actually took 6 or 7 types trades like this. I took 6 or 7 trades like this, and you can actually see these, that I'm taking these kind of trades in live. So yeah, I will set a limit order on this supply zone. Let's see if the 2 pip stop loss covers this whole zone. Yeah, 2 pip stop loss covers the whole zone. But I'm asking you, will you set a limit order on the 50%, or the full week is enough for you? Just mark the right answer. What do you think? Would you set a limit order on the full body, full week, or, I mean, the answer, yeah. Would you set? Yes, you would. Okay, perfect. So we will set the limit order right here on this week, and let's see what happens. And if price breaks below this low point and sweeps the liquidity to the downside first, I will remove this order. But right now it seems like that it's perfect entry criteria for me, that I will take anytime. Okay, it's coming up, sweeping liquidity and creating more liquidity. Sweep, perfect. Entry. Okay, still in the trade. Now we just move this somewhere around here. Okay, still in the trade. Now, okay, it's perfect. All right, I will set it to break even now. Let me just explain this. I wouldn't set it to break even right here at this region, even though prices broke below the last recent low point somewhere around here. I wouldn't set it to break even, because this could have been just a liquidity sweeping movement to the downside. This candle could have been the liquidity sweep of these candles, right? So after this, I wouldn't set my stop loss to break even. I would keep it right here, because price has a chance to actually reverse on some kind of black right here. But after price not just sweeps the liquidity, but breaks below the last recent variable zone. This was the last recent variable zone, which has created this upside candle. And this zone is on part of this liquidity, as you can see. And after a break of this zone, I will simply set my stop loss to break even. So our stop loss is running in break even. Let's just see if we can find a good higher time frame target for this trade. Higher time frame target could be this one, maybe, or even below. This seems like liquidity to me. This seems like liquidity to me, built up for deeper price sectional regions. So this is pure liquidity, as you can see. Okay, this is pure liquidity. First touch, second touch, third touch, and after the third touch, price just started to sweep the liquidity. So I would 100% target this low point right here, because it's part of the liquidity. So I will target this low point. this will be a perfect target for me because, as I said, this is the last piece of liquidity. I'm mainly targeting liquidity. I'm mainly targeting liquidity combined with 50-minute zone, 50-minute zones. But below this liquidity, there can be identified a good 50-minute zone. So this isn't a 50-minute zone for me. Let me just switch to the 50-minute chart if there will be a 5-minute zone. So let me just switch to the 5-minute chart if there will be a 5-minute zone. Yeah, that's what I was trying to say. And this could be a 5-minute zone, but this zone has been mitigated by this movement. So basically this zone is also part of the liquidity. This zone has been mitigated by this movement, as you can see. Basically, this is also part of the liquidity, this huge liquidity trend line. So I would rather target 1 to 10 risk reward ratio at this point because it's a main trend, and I'm mainly targeting 1 to 10 in main trend movements, as you may know, and 1 to 5 in counter trend movements. And yeah, I will target 1 to 10. Let's see what happens. Let's see what happens if we are targeting 1 to 10. Okay, that's just too fast. Sorry. That's just too fast. Seems like price is reacting on something at this region. Seems like price is reacting on something. Let's just see. Okay, it's a reaction somewhere around here. Let's see if there's a 5-minute zone. Sorry, but this is a terrible price action. Yeah, price is reacting on some kind of extreme zone down here, which is part of the liquidity. So we don't have to care about this kind of zone reaction because it's heavily part of the liquidity, right? It's heavily part of the liquidity. So price is reacting on this zone or even swept below this zone, but actually it's building up a nice criteria. Okay, now it broke below this zone. It 100% broke below that zone and broke below the low point. So the low point and the liquidity point have been broken, but there's still one more low point that is part of liquidity, and this is part of the liquidity still, right? And we are targeting still the liquidity. But let's see if we can find a good entry continuation and scaling position. And we just close this zone because it annoys me. Okay, so there was some kind of reaction, liquidity point reaction. This liquidity point reaction have been broken with several candles, and with 1, 2, 3, 4. Let's see if the 5th candle closes below. Yeah, it has been broken on the 5-minute chart, because if this was a zone, this was a weak low point right here. It has been broken with several candles, 1, 2, 3, 4, 5, 6 candles. So it has been closed below on the 5-minute chart too. So this is a 5-minute close below. How would I manage it right here? Let me just explain. Let me just take a look at it and explain. Actually, there's liquidity. There's perfect liquidity built up once again. Okay, so knowing the fact that prices broke below a weak low point, which is part of the liquidity, we are still expecting deeper price action regions. Why? Because we are following the main trend and we are targeting the liquidity, which is right here, right? So we are targeting this huge liquidity line starting from this zone, going through this zone and this zone. We are targeting this liquidity line. 1, 2 piece of this liquidity has been swept. More liquidity is being created right here on this zone for the deeper areas, for liquidity sweep. The reversal right here, the purpose of this reversal, let me just see if it's really a reversal. Yeah, it's a reversal. The reversal right here has been caused. The purpose of this reversal is just liquidity collection. Double bottoms have been built up right here. So more liquidity built up for the deeper price action regions. So we are following the main trend, and we can actually set a limit order on some kind of supply zone above the liquidity. Yeah, this supply zone isn't working. For the same reason as the 4-hour zone wasn't working, because this is part of liquidity. First touch of the trend line, second touch, third touch, liquidity trend line. And as we know, as we already learned this, the less recent zone above the liquidity could easily hold the sweep and reverse price to the downside. And right now, here's one zone for me. And let me just explain. Here's this zone. This is the decision, and this is the extreme. Between the extreme and the decision, there's inefficiency too, right? If the decisional, let me just explain why is it a decisional? Because it was reacting on the demand zone down here. This demand zone has changed character back to the upside here. And as you can see, this candle was reacting on this demand zone. This was the less recent demand zone in this case. This candle was a reactional candle. And after a reaction, basically it's a flip zone. This candle has flipped this zone with this huge inefficient movement and swept the liquidity. So this has every single criteria. This is a really strong zone. And using simple criteria once again, that's why I'm mentioning criteria so much in this session, because that was the weak point for you, that you couldn't identify criteria and couldn't track criteria. We are tracking criteria for these zones too, as you know, because we have a criteria tracker for these zones too. This zone has all the criteria. It has changed character or flipped the zone or broke structure. Flip is correct. Here's a flip. it has created inefficiency. One more criteria, it has created a liquidity sweep, right? This zone has 3 criteria, this zone has 2 criteria, because, or mainly 1 criteria, because this zone has only inefficiency. This zone has 3 criteria, so all of the 3 criteria are there for this zone. This zone has only inefficiency, so in this case, I will set a limit order on this supply zone up here, because as you know, we can expect a reversal in the main trend after liquidity is being swept, right? So this is the main trend. Price is following this pattern over and over again. Like, here's the liquidity, sweep of the liquidity, reversal. Here's the liquidity, here's the supply zone, sweep of the liquidity, reversal. We can expect this scenario. Okay, let's see. I will set a limit order on 50%, and let's see if this covers the whole zone. Yeah, it covers perfectly. Same target, liquidity line target. Let me just remove these drawings from here. Sorry, just a minute. Okay, more liquidity has been created. And that seems like it's being swept. So price, maybe there's a chance that price won't come up to this zone and just reverse after the liquidity sweep. There are scenarios for this one too. But okay, that was fast. Okay, liquidity has been swept. And seems like prices reacted strongly on this zone. Come up, swept the liquidity, all of the liquidity from this region, and reacted strongly on this zone. So we are in the trade. So it's working, right? But seems like this reaction couldn't present enough reaction to change character to the downside here. So yeah, there's a chance that we'll be swept out from this trade. And you asked that how would I manage the first trade? I wouldn't manage the trade above the liquidity line. So there's no option that I will manage the stop loss of the first trade above this liquidity. I will manage the stop loss of this trade to this stop loss point or to 1 risk reward ratio. So this trade, I will manage it to 1 risk reward ratio, which is here. No, that will hit the stop loss. So I will just keep it. I will just keep it in break even. That's the best possible scenario, because if I manage it to 1 risk reward ratio, then this tagging will actually speed me out from the trade. So it's unnecessary to manage. I will just keep it the way it is. So let's see. There's a chance that price will sweep us out. No, there's a reaction once again. Okay, there's a reaction. Huge reaction. Perfect. Let's see if this movement can break below the less recent swing low. This is the less recent swing low. Why do you enter in the 50%, not the whole zone? Because it's a simple 50% entry point. We've already learned this. It's in the video course that if the wick is bigger than the 50% of the whole candle, we are setting an entry limit on the 50% of the zone. It's in the video course, maybe in the second video. It's the second video of the video course. So yeah. Okay, so let's see if price can break below the swing low point. Actually, the session close is really, really near. Yeah, it could. It could break below. We did hit TP on this one and this one too. But let me just remove this. The session close is really near. In 40 minutes, the session will close. But we have a good continuation point right here. We have a good continuation point. I will close this trade. I will close this trade too. We have a good continuation point right here. Sorry, if this point, this is a flip zone once again, because it was reacting on an extreme zone right here. If this zone can create liquidity, so if there will be a liquidity creation for this zone, I will take this zone as an entry point. If this zone can't create liquidity, so there won't be a liquidity creation for this zone, then this zone will be liquidity for the extreme, right? Because the extreme is also a flip zone. Reacting on this candle, on this demand zone, reaction, flip. Reaction, flip. Both of these zones are flip zones. This is a flip zone, this is a flip zone. And as we already learned this, if there's no liquidity creation for the decisional one, then the decisional one will be the liquidity for the extreme one. This is how it works. This is what I've been explaining for you for a year. I've been explaining this for you for a year now. Okay, so let's see if there will be liquidity creation for the... Actually, there's liquidity creation. Okay, we can call this as liquidity creation, perfect liquidity creation. So I will go for the decisional one. Maybe we won't go for the decisional one because it seems like it's too huge. Let me just see if the 2-pip covers the whole zone. Yeah, it covers. Okay, so we'll go for this. Let me just switch to the 15-minute chart. Okay, this is spoiler alert. 15-minute already spoiled this for us. So let me just switch back to 1 minute. Sorry, we didn't see anything. Yeah, that's a bad thing that if you're on the 1-minute chart, and for example, this is the first minute of the 15-minute candle, and if you switch to the 15-minute chart, you will see the whole 15-minute candle. So if the first minute of the 15-minute candle is here, you will see the whole 15-minute candle, and you saw that prices went down. Yeah, this is the only bad thing about the backtesting function in TradingView. More liquidity creation, perfect liquidity creation. I will still go for this trade. I will still go for this trade because there's perfect liquidity creation for this zone. So I'm still keeping my limit order there. there's a reversal. And yeah, we are not setting a limit order on this zone. Let me just ask. Anyone who raises their hand first can answer this question. Why can we set a limit order on this zone? Who was the first? Let me just check. Sorry. PP.
Because it's part of the liquidity.
Exactly, man. Thank you. It's part of the liquidity. Part of the liquidity. And if it's part of the liquidity, we can set a limit order on this zone. It's this easy. So above the liquidity line, we will have a zone that has a chance to hold the sweep and reverse price to the downside, just like for the other scenarios. Like same scenario right here. Liquidity, sweep, the less recent zone above the liquidity, reversal on after the liquidity sweep and the zone tap. Zone, less recent zone above the liquidity, zone sweep, liquidity sweep, zone tap, reversal. Zone, liquidity, this is the less recent zone above the liquidity, expectation sweep, expectation reversal. This is how structure works. This is what we can see on our screen. Okay, that was fast. As you can see, this is a valid loss. This is perfectly a valid loss. Why? Because we follow the same criteria for the third trade as we was following for the first and the second trade. It's perfectly fine to take a liquidity sweep movement like this. Let's see. Session close is far away. Not far away, sorry. It's so close. Session will close in 10 minutes. In this case, I'm asking you again, would you set a limit order on this zone? Or you would just simply wait for a reversal and change of character and confirmation entry? Personally, I will wait for a simple reversal and confirmation on this zone. So question, yes or no? Would you wait for a reversal? Would you wait for a confirmation here? Yes or no? You will wait for a confirmation. Okay, perfect. So that's what we are going to do, because I will wait for the confirmation too. You will wait for the confirmation too. Let's see what will happen. Okay, it has been decided quickly. Perfect. We would have taken a loss here too. But if you would have taken a loss here too, that will be fine again. Why? Please, thank you. Why would it be fine to take a loss here? Because we followed the plan right here. This is simply a valid loss. This is the less recent zone above the liquidity. Simple, valid loss. Because we took almost 20 risk-reward ratio with the same trade entry models like this one, right? Same entry models collected almost 20 risk-reward ratio for us on these two trades. We tried this one more time. This is a valid loss. And why would this zone be a valid loss once again? Because if this zone can't hold price and you're following the main structure, and this is a valuable zone once again, this will have a chance to hold the sweep and reverse price once again to the downside. And I've used this entry so many times. I'm basically using risk split entries so many times. So second scenario would have been for these kind of supplies that you set a 0.5% risk entry on this zone and set a 0.5 risk entry on this zone too. So 0.5% here, 0.5% here. And by sweeping both of the zones out, you will take -1 risk-reward ratio, -1%, right? But setting a limit order without risk split, so setting 1% limit order on this zone and setting 1% limit order on this zone isn't an option. The only option is that you set a limit order, 1% limit order on this zone, or you set a 0.5% limit order on this zone, 0.5% limit order on this zone. These are valid losses. These are simply valid losses. So yeah, session will close in 9 minutes. Let's see if we can get any confirmation, but I don't think so. Were there any? No, there wasn't any. As you can see, there wasn't any zone that price is reacting on. Closing in 4. Yeah, session has closed. Session has closed. That's it. That's it for this session. We had a 1-to-10 risk-reward ratio and 1-to-9 risk-reward ratio, -1 risk-reward ratio. That's 18 risk-reward ratio for this session with the same entry model. So as you can see in this session, yeah, it will be a possible scenario, but the session has closed. And we don't care about what is happening after the session, but we will see for the favor of yours. So as you can see, the same entry model have been presented for the third time in this session. We use the same entry model, same pro trend entry model. Flip zone, liquidity creation, tap, go to the downside. Another flip zone somewhere around here because prices swept the demand zone somewhere around here because there was a reaction. That was another demand zone. That was a low point actually. Sweep of that zone, flip of that zone, liquidity creation, tap, cancellation. Once again, flip zone, right? There was once again a demand zone, flip of that zone, liquidity creation, possible continuation, stop loss. Perfect. It was a perfect session. I would say that booking 18 resource ratio in a single session from 3 trades is perfect. So yeah, let's just see what happens after this. No, it wasn't working. The main trend is still pretty bearish. It's really bearish, right? So we are following the main trend, which is bearish. In this kind of scenario, when the main trend is extremely bearish and every single time frame have turned into bearish, I will just simply wait for short confirmations and I wouldn't take any longs. It's the easiest if you follow the main trend. Can you see the power of the main trend? Price is following a main trend main trend bearish movement. By simply taking short, you can book this much of a risk-reward ratio from these trades if you're following the main trend. So yeah, it would have been a revenge trade, exactly. Okay, guys, have you got any questions about this session? I believe it was pretty fucking clear. Sorry for saying fucking, but yeah, sorry. Any tips on how to manage a situation like this? First trade mentally, I mean, the huge pullback after. You have to skip the emotions. You have to skip the emotions, basically. There's no other tip for this. You have to skip the emotions because this is a maniacal trading. This is a rule-based, statistics-based maniacal trading plan. And no room for emotions, basically. You know that this will be a break-even trade if it will hit your break-even. That's it. Hey, Flipping, every time when you mention highs and lows are either swing highs and lows. I usually mention if it's a swing high or it's not a swing high. But yeah, I usually mention it. Marcel, please, how can I set chart and save like you? You mean the colors and stuff like this? I will send you the colors, okay, in the group. For me, there are 2 ways out for a trade. Stop loss, exactly, PP. There are 2 ways to close your trade. Stop loss, break even, or TP. That's it. Or you mean stop loss is also trading stop loss too? So 2 ways to close your trade. Stop loss, trading stop loss, break even, TP. That's it. No other way. You don't close it manually. You don't close anything. You just wait for your TP. You wait for your stop loss. Wait for your break even. Marcel, can you tell me about your monitor? It's a different monitor that I'm usually using. It's not my monitor because I just traveled home to my parents because my father had a birthday today, and we were celebrating the birthday of my father. And I will travel back to my home in this evening. That's why I had to actually reschedule this session for 2 hours earlier because I have to arrive back home to be prepared for the next day, tomorrow. And yeah, it's not my own monitor, but the monitor I'm using is an LG 34-inch monitor. I won't tell you the exact type of that monitor, but it's a 34-inch monitor. It's better a loss with a plan. Exactly, it's better to take a loss with a plan than taking a win without a plan. Yeah, I will send you the colors. I will send the colors to the group, guys. At my home, as I said, it's an LG 34-inch, and I will find the exact name of that monitor. Happy birthday. Thank you, brother. Okay, guys, so if you have no other questions, thank you guys for wishing happy birthday. I will tell my pups. So if you have no other questions, I will just close this session and I will end this session. Have you got any more questions, guys? Any more questions? No, thanks. A feedback will be appreciated about this session in the feedback session. Okay, I would really appreciate the feedback if you could leave a feedback on this session. And yeah, thank you guys for being here. Thank you for listening to this session. And actually, once again, thank you for being here because only 40 of you guys were here. I will stop the recording.